It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, it's the Real Estate Breakfast. We're all over the place in terms of sort of losing track of the date. If you are still in holiday mode, lucky you. The weekend is coming up if you are back at work. And a reminder, our email address is myrealestatepodcast@gmail.com. Perhaps let us know how your journey is being mapped out for 2026. You know, over the Christmas New Year period, you've been doing a lot of talking, a lot of analysing the property market. Let us know what you have decided, or better still, we've got our voice recorder where you can leave us a voice message. That recorder is in the show notes below. Yeah, Friday morning, January the 9th, and we are back into the time tunnel this morning with our summer series of real estate. So many highs and lows from last year, which is now behind us. If you are like me, I never tend to look back, only forward thinking, which is kind of in the job description. However, this morning we will go back in time, and that is next.
You're listening to the Summer Series on the Real Estate Podcast.
It's definitely, if I have to sum it up in one word, it's a better value compared to other interstate purchase. So you got investors from Adelaide, Sydney in particular, that are definitely back to the market here in Melbourne. They feel that the growth here is definitely better. So while we're not seeing that increase straight away, but you've got the Footscray Hospital getting built, which is going to mean that anywhere in Footscray is going to, all those apartments or buildings that are getting built because of the Footscray Hospital, they're definitely on the pickup.
There is this early sign of recovery that we talked about last week, which is starting to emerge. Elise, I want to ask you about the first home buyer market, some of your observations, particularly around where mum and dad have decided to put some money in to help their children. Is there a little bit more confidence as a result of, as I mentioned before the break, those rates coming down?
Yes, definitely. I had actually 2 weeks ago, a mum called me from Sydney and facilitate for her buying for her son an apartment in Footscray. And the first thing she said to me is, I want to help my son get his first home through you guys and obviously in Melbourne. And when I asked her what was the reason, basically, why do you think Footscray is a good start? And she said, it's a good entry level price points. She goes, it's still affordable. And we can definitely see that it's better for us to purchase something for him there than in Sydney.
All right, well, let's talk about auctions, because Melbourne's pretty big for auctions, and I think you like auctions, Elise. So what's happening around auctions at the moment?
Well, the clearance rate is definitely picking up as well. We're seeing now for the last 3 weeks over 70%. And when we talk about something over 70%, we're definitely talking about good auction clearance rates. Why I love auction is definitely because for a few reasons. I feel like it drives always the price up for a property. You don't put a cap on the property. You basically drive a sense of urgency for buyers to be ready for the day. Do an unconditional sale, which for me, once you sell the property, it's unconditional. You get a relief for the vendors that it's done, and then buyers as well feel like they've secured the property and it's all done and dusted. I also like it because of the transparency. You get there on the day, everyone sees each other, they know their competition, and they basically get the true market value because it's all live, it's all happening. So yeah, that's for me. I'm big at auction and I always prefer to go to auction.
Yeah, absolutely. Before I got into real estate, the market did not too much. There was no real capital growth. From what I'm told, if you were selling your property and you were breaking even, then you were doing really good. Even for myself, buying property in Ipswich at a young age, it was kind of scary because you didn't know whether you were going to get any sort of momentum from it or any sort of benefit. But then, like you said, COVID came along, and I guess still being fairly undiscovered and the prices still being at a fairly low median, the attraction was there, and from there, the prices have, escalated quite dramatically in a lot of areas.
So in Ipswich, in terms of these larger blocks, how much heat in the market at the moment is there from people from, let's say moving from a Melbourne coming into your region or a Brisbane, and they're wanting larger land blocks? How busy is that at the moment for you?
Yeah, extremely. I actually met a gentleman on the weekend who was doing research from Melbourne. He's just moved up. And I had another gentleman from Melbourne who just bought one of my acreage properties in Carrolese. We do see a lot of buyers coming from the inner suburbs of Brisbane, not necessarily selling a property, but renting there and coming out to get onto these larger blocks. It just comes down to what they're going to spend closer to the city versus what they get, to compared to out towards Ipswich. They can get an acre, quite a nice home for around that 1.3-ish kind of money. It's kind of a no-brainer for them. So I'd say a majority of our buyers for the larger lot areas in Ipswich are coming from probably more so in Brisbane than actual around Ipswich at the moment.
I want to ask you about, people's buying habits, because sometimes people can be out. The last thing on their mind, Jesse, is buying a property. We've got these auctions that are taking place. There's sales offices with new product. You can be walking and just sort of minding your own business. Suddenly you get the idea, the notion that, hey, I'm going to start bidding on this property, or you sign up for something new.
Yeah, definitely. I think they're the best types of purchases personally, spontaneous ones. But it's not uncommon. Like, we see it quite often where people will be driving around an area. They might have gone and looked at another home, or just discovering an area, doing a bit of research, getting a vibe for how it feels, and then wander through an open home that they might have been passing by, and next minute they're filling out an offer form and purchasing it. When they're putting up a sold sticker, they're kind of like, what just happened? That happened quick. But they're usually the happiest buyers, I find.
I think you're right. There is something really nice about when you discover something. Now, I'll give you my own personal take with something that happened to me. And I was out in Brisbane. We were having some brunch around the Botanical Gardens. Came across this sales office. At the time, I can't remember the name of this building, but it was going to be Brisbane's tallest high-rise. From memory, it was 80 stories, but this is back in 2007. I had come up from the Gold Coast. Walking around as you do, you go into the sales office. At the time, I know that the Brisbane CBD, year on year, that was growing at around 30%. So it was like a no-brainer. 5% down. They weren't going to finish this complex for 5 years. Nothing to pay in that time. I thought, gee, this is an easy way to double my money. Hang on, about 5 months after signing that contract, the GFC hit.
Oh, no. Yeah, right.
But I came over here as a whippersnapper in my early 20s, coming to explore the world. Arrived in Australia, travelled around as a backpacker, as you do, and just completely fell in love with Cairns, and pretty much been here ever since. Fell in love with the place.
Well, Lancashire, of course, in the winter, extremely cold. You went from one extreme to the other.
Put it this way, I wanted to get as far away as I could, and on the globe, I think this is about as far away on the planet as you can get. So I won't be going back in a hurry, that's for sure.
Now, Cairns isn't just a holiday hotspot. It's rapidly emerging as a regional real estate, or some will call it a powerhouse, with strong price growth, rental returns, a boom in development, which we'll talk about in a moment, and growing investor attention, of course. The far north is firmly on the radar for buyers, renters and developers alike. First off, let's talk about the Cairns Regional Council's push for these 18,500 new homes in Mount Peter. It is the southern growth area that is underway, backed by state-level planning and grants. Reasonably significant here.
Yes, absolutely. Cairns has been experiencing quite decent growth, particularly since COVID. It put the far north on the map. We came through COVID very, very well. No lockdowns, hardly had to wear masks, where the rest of the country were being, locked down and couldn't leave their homes, basically. After that, post 2019, in 2020, 2021, we saw significant migration from intrastate owners moving from Melbourne, Sydney, Brisbane, moving up to Cairns, just to experience a different lifestyle. With that, the prices started to grow. We've been extremely affordable and undervalued for many, many years. In fact, previous to COVID 2019, the Cairns property market median prices hadn't grown in 15 years. It remained dormant, tremendously undervalued. And when the southern buyers came up here, they just saw how great value it was. So they'd be selling a home down in their capital cities, wherever they were from, and coming up here and buying two. They buy an investment property and a house much better than the one that they had. And then with the change left over, they bought investment property or sometimes two. So that took the properties from the market and started making the prices grow higher and higher, making it more competitive. And then word spread around, and then more people started investing into Cairns as well. We saw a huge growth of investors buying into the Cairns market. Over the last 5 years, I'd say we've seen significant growth in Cairns, 60, 70, 80%, depending on the suburb where you live. And that's created the demand for people in Cairns.
Some of these emails we've received from Vietnam, from Thailand, etc., where people have just said, no, I'm not going to, handle those prices. Better for me to go and live somewhere where it's a little bit on the cheaper side.
Yeah, and look, I think if you're relocating to another country, this is where it's absolutely a shift in lifestyle. And I think, there will be a section of our population that will be reevaluating, what do they want from life? What is that work-life balance that they want? Where do they want to raise their children? If you are priced out of a housing market, you start to really reevaluate what you're wanting. And it's one of those things that we see in Sydney. There has always been this drain of people away from Sydney, not necessarily to overseas, but particularly into regional New South Wales and also to southeast Queensland. And it is particularly poignant for young families, those that are in their prime working age, that have a couple of young kids, and they're leaving Sydney. And an article recently, and it was very poignant, and it was basically insinuating that Sydney could be the city with no grandchildren, meaning that for grandchildren, when they get to the age of purchasing a home, they're just not going to be able to, because it's just so far beyond their means. That is really showcasing where we have a big problem, a social problem, and inability to actually purchase. And it's shifting demographics. It's altering our population shifts. In all the time that I've been analysing Australia's housing market, I think this is the period of time where we have got government really focused on supply, we've got the housing accord. We just need to really ensure that we deliver, that 1.2 million homes over 5 years, and continue to deliver it outside of that 5 years too.
Yeah, just coming back to the ripple effect, about a week ago, it's the complete inverse if you own a property in Sydney, because we were talking to Steve and Tanya. They moved out of Sydney and they went to Port Macquarie, bought in Port Macquarie. They had a 3-bedroom property in Sydney. They didn't downgrade, they upgraded to a 5-bedroom. He was saying plenty of room. And the key thing there was he's got a whole lot of money left over in the bank account, which he said was really nice. So 2 different sides of the coin.
Yeah, wow. 2 different sides of the coin, totally. One of the core things is we've seen some extraordinary rates of growth in some of our smaller capital cities as well, or our mid-tier capital cities, I should say. So it has been, locations like Perth, Adelaide, that have seen very strong rates of growth over the last, 5 years. And what that does change is your household financial position. And what that means is, particularly if you're selling up and moving to a more affordable location, it's like a lottery win, I think. The equity growth that some people have experienced in their home prices in recent years has created a life-changing effect for them. It's challenging if you want to stay in the same location, but I think if you want to upsize and relocate and your money goes a bit further in another location, this is where you're really winning.
There are a dozen suburbs near Melbourne, Canberra, and Darwin CBDs now offering units under $500,000. Price drops are being driven by oversupply and slower gentrification. Now, these pockets may present entry points for buyers priced out of the trendier areas, with some unit prices falling up to 17% year on year. So, yeah, it's a case of just hold on to your horses.
Many of the areas that you speak of are areas, particularly in Melbourne, that were hugely oversupplied for around about a 12-year period. And we first started talking about the potential oversupply, I'm guessing 15 years ago, when we could see that pipeline supply was incredible and there was a lot of apartments coming into Melbourne, both inner Melbourne and those immediate suburbs around Melbourne, like North Melbourne and South Melbourne. And at the time, we knew that there was going to be a ridiculous oversupply. We certainly advised our clients not to be buying units there. A lot of people did, not our clients, but a lot of people did go and buy units in Docklands and North Melbourne and South Melbourne, and subsequently waited an awful long time before they see any positive price movements in those areas. But what's happened in 2024 is that inner Melbourne only had 1,400 apartment completions, which was the third lowest supply figure in more than 20 years. So it's for the first time it did moderate a little. The supply pipeline is now expected to remain a bit static. So it looks like what's coming in the next 5 years is probably enough new apartments to satisfy existing demand rather than an oversupply, which means that it's going to take around about 5 years before we then start seeing those prices begin to rise again. And what I want people to be aware of is that it's fine to go and say, well, these prices have fallen and therefore I'm going to get in now. That's great, so long as you don't have an expectation that you're going to buy into these markets and suddenly get an asset that grows. Great for first homeowners who are prepared to sit there and wait for a while. But for investors, it's probably not such a great idea, because in order to invest again, you need that equity, you need your property to grow. And if it's not going to grow for a while, you're not going to achieve that.
We connect you to the best real estate information across Australia. The Real Estate Podcast.